Scott, it's good to have you back on the show. Looks like the move lower in Kraft caught your eye today. I saw the gap down. This is on earnings, down to 26.05 last I looked. Tell me what you've got, what you're seeing.
Well, it has come off of that low. I think it's trading right around 27.5 right now. But, make no bones about it. Unlike Zillow, where they had, maybe a less than stellar earnings report where the CEO came out and talked about all the positivity and all the good stuff going forward, it's completely the opposite with Kraft Heinz. Things are worse than they were, worse than anybody had expected. They've lowered their guidance. Sometimes you look at stocks and when you see just a massive sell-off, you look, oh, what happened? And maybe there was a stock split, right? Well, this is a natural stock split in Kraft Heinz from where it was just a year or two ago. And you know what? Things are not even looking up from here. You can't even point to that 26.05 low today or where it's trading right now, 27.5, and honestly say, wow, this thing's going to rebound from there. It's just dismal.
All right, Scott, you're upsetting some of our viewers out there comparing KHC to Zillow, ticker symbol Z. I mean, completely different situation here in terms of the move to the downside. Yes, I hear what you're saying in terms of the CEO talking it up and certainly in terms of earnings. Now, I've been watching this stock, KHC, again on the move lower. The gap down today is obviously very concerning. The one thing I guess the bulls have at this point is they're $1.50 off the lows, as you mentioned. Scott, what's it going to take for them, that is Kraft Heinz, to turn things around here?
It's going to take another quarter or two of just some future, earnings, or at least a light at the end of the tunnel, because I think what's happening now is the investment community especially is looking at this and say, well, we've heard the story that the worst was behind us. We've heard the story that, everything is in the rearview mirror, and however, it's not. So to me, we're not going to start seeing any money piling back into this one until maybe the third or fourth quarter, or maybe even into early 2020 if they start to get their game changed.
Yeah, we're not even seeing any bargain hunting. We're talking year over year right now, basically down 50% on the year. Now, let's move away from some quarterly reports that we did get and some of the earnings from Kraft. Let's move on to preview a couple companies that are set to report. Let's talk Activision first, ticker symbol ATVI. What are you going to be looking for there?
From a technical standpoint, this thing is butting up right up against its 200-day moving average, trading just over it. When I look from a technical standpoint, Ben, if we see some good guidance, that's going to be the key here with Activision. Not so much what the past numbers were, but what the guidance is. This thing has a lot of room to run to the upside. Yeah. There's a big gap if you look, from a technical standpoint.
I'm looking at it right here, 55 to 65 roughly,
Exactly. I'm not saying that we're going to get there off of good guidance. That's what I'm looking for, and there is some decent moderate support, just a couple dollars below the marketplace or below where it's trading right now. So I'm really looking for any surprise would be an outsized surprise to the upside. And you know what? Look at some of the other names in their space. EA, Take-Two. You know what? That could be a bullish sign for Activision here.
Yeah, now this stock has been roughly coiling roughly between $40 and $55. The lower extreme of that gap that you mentioned from back in, let's see, it looks like the first or second week of November. I mean, is this the kind of thing, this earnings report, that could move this stock out of this range? Because ultimately that's what investors are looking for. And for the most part, Scott, the trend has been to the downside, aside from this consolidation area. I mean, they're coming off a high of 85 roughly the fall of last year. But again, they've been stuck in a $15 range roughly since November of last year.
Big sideways trade, which to me, looking at that chart, tells me there's going to be a big move. And again, I don't know whether that move is up or down. Yeah. I'm just looking from a technical standpoint, saying that there's a lot more room on the upside here. And actually, I have, full disclosure here, I own an upside calendar call spread, just placing it on that report today, looking for some good guidance.
All right, well, we're going to look for a move here. I oftentimes talk about that consolidation, that sideways consolidation. And again, the more mature it gets in theory, the more violent or the more energetic that breakout will be one way or the other. I can understand why you have that position on. Let's move on, though. Another company set to report earnings cruising today. We're talking Uber. What are we going to be looking for there?
Nice adjective there. I don't know what to expect. There's just obviously no historical data here.
Yeah.
The market is expecting, roughly a 10% move one way or the other here. And for the limited amount of time that this stock has been trading, a 10% move does take us to some support on the downside and some resistance on the upside. Hard not to think that they wouldn't follow in Lyft's shoes from their report yesterday, but maybe some of that is baked in a little bit already. I think the bump today obviously is off of Lyft's good results. The market seemed to take the news coming out of New York City yesterday in stride. Yeah, after hours, Lyft had been up a lot bigger than it is now, traded down off of some of that news, and now it's back. So I think the market has already digested that. I would look more for a range-bound trade in Uber, maybe slightly higher, but a range-bound trade.